Hi, everyone. Welcome to DomainSherpa. And as always, thank you for tuning in to the podcast with the best domain name and digital asset content in the world. Today's episode is a Down the Rabbit Hole with Drew and special guest Chris Bruno, co-founder and president of RallyRd. We talk about our partnership with Rally and some very exciting things that are coming up on the platform. And since it's a Down the Rabbit Hole, as we say here on DomainSherpa, all roads lead to domains. And in the reverse, our work with domains has us venturing all the time into different areas, hence the jump down the rabbit hole. And remember, if you're listening to the audio version of this podcast, you can also watch the video version at DomainSherpa.com and on our YouTube channel at ds.tv. You can also listen to the shows on Apple and Spotify and other podcast platforms as well. So please make sure to hit the like button and the subscribe button everywhere that you can and help DomainSherpa grow the pie. All right. We integrate our shows with Muse.ai, which provides search functionality for the shows and transcripts as well. So please check all that out. And props to our sponsor, Dan.com, the #1 place in the world to buy and sell your domains with a special platform made for domain investors. And special shout out to our own business, MediaOptions, the #1 domain brokerage in the world, specializing in domain acquisitions, sales, and appraisals. Find out more at MediaOptions.com, where you can also sign up for our newsletter for the best domain names and domain opportunities available in the market every week, and also featuring key insights and other helpful information related to branding, naming, and of course, domain investing. Also, remember, we've got NamesCon coming up in Austin, Texas, June 5th to June 8th. Drew will be speaking. We'll also be doing a DomainSherpa panel before the live auction. So go to namescon.com for details and get registered. Last thing, since RallyRd is regulated by the SEC, we will display some disclosures and disclaimers right now before we get into the episode. And for those of you who are only listening to the episode, please go to the show's page on DomainSherpa.com on the website and see all those disclosures and disclaimers in the show notes.
The assets, including but not limited to MJ.com, that will be discussed during this podcast are the underlying assets for a series of interests that is being offered by RSC Innovation LLC, RSC Collection LLC, or RSC Archive LLC, which are affiliates of Rally. However, no interests are being offered for sale through this broadcast. The only manner in which an investor may invest in one of our offerings is by going to the RallyRd website or app. Prior to acquiring any interest, potential investors should read the company's offering circular, which is available via the Rally platform in the legal tab. It is also publicly available via the SEC's EDGAR service available at sec.gov. Neither Rally nor any of its affiliates provides any investment advice or is making any investment recommendations to any person, and no communication on this podcast or through any other medium shall be construed as such. Please see full disclosures at the RallyRd website at rallyrd.com/disclaimer.
Yeah, with that, it's now time to get into this episode of Domain Sherpa, where all roads lead to domains. So let's go ahead and jump down the rabbit hole. What's up, Sherpa Network? Thank you for tuning in today. My name is Jonathan Tenenbaum, a.k.a. JT, a.k.a. Jay on Sherpa Winfrey, the Mad Hatter, host and producer of Domain Sherpa, where all roads lead to domains. Today's show is a part of our Down the Rabbit Hole series, so welcome to the tea party. As we say on here on Domain Sherpa, all roads lead to domains. And in the reverse, our work with domains has us venturing all the time into different areas and topics, some domain related, and plenty of others that aren't, hence the jump down the rabbit hole. Usually we pick a topic to get into and we cover some related news of the day, bring on some interesting guests, good stuff like that. This particular show is actually started by my homegirl, Jen Sale, so I got to give a shout out to Jen. She would describe it as a tech-adjacent digital asset, pop culture, tangent, positive podcast with some domain stuff thrown in for good measure. Today's topic is one that I'm super excited about. We're going to be talking about RallyRd and some really exciting things happening on the platform. For those of you who don't know, if you've been in a cave or under a rock, Rally is the leading platform for buying and selling equity shares and collectible assets. Buy, trade, sell shares of classic cars, sports memorabilia, comics, much more, art, first edition books, wine, whiskey, you name it, Jordans, let's get it. All new asset classes. And it is such a slick, dope platform. I know we've talked about it on the show in the past because we've done some things there. We'll get into all that. But if you have not been on there recently or have never been on there in the first place, please go to RallyRd, RallyRd.com. go on the App Store, get the app, get busy, get involved. It's and get familiar. So let's go ahead and I'm going to introduce my guest, the co-host. I'm going to kind of operate as more of a moderator today and let these dudes do what they do. Again, we've got some exciting things to talk about that we've got going on the platform, a special relationship partnership that we have. And anyway, let me get into it real quick. So over to my right, I got my boy Andrew Rosner, aka Morpheus, aka the Dirk Diggler, Digital Assets, aka Bob Lee Swagger, the Sniper, aka Drew. Drew got what I need. Yeah, never gonna give Drew up. Graybeard, the domain pirate. What's up, man? You said no AKAs, and I can't help it. I got to do it anyway. What's up?
Nothing, man. I'm super excited to rap today because I think it's literally my number one favorite topic in the domain name world these days. And I think it's the future of domain investment. So I'm pretty pumped to rap with you and Chris about domain name fractional ownership and the future of domains.
I love it. All right. Well, with that, let's go ahead and introduce the real special guest. We got my boy Chris Bruno, aka Encanto. We don't talk about Bruno, aka Chris Bruno Dos Tres Cuatro, aka Chris Bruno Mars, aka Mr. RallyRd. Take me home to a place I belong. You know what I'm saying? Big shout out to John Denver as well. What's up, Chris? Is the so why don't you introduce yourself? I don't have your bio right in front of me, so I don't want to undersell like you and your credentials. So why don't you go ahead and let everybody know who you are and what you do?
Honestly, I just want to get you in my office on a regular basis. I haven't been this excited. Like, I mean,
let's go.
Seriously, like, just get you every morning to get the entire team ready to work. It would just be a whole next level of operations here at Rally. So that's that. Like, everybody needs this, and great job on on getting us ready to go here. No, I'm Chris. I'm very appreciative to be here. You know, we built a friendship together, the three of us, over a number of years now. We started Rally back in actually 2016, which I can't believe how long ago that is.
Yeah.
But our goal was simple, right? There's a lot of amazing assets out there. Those assets have traditionally been inaccessible to the people who care about them and understand them. And like that was kind of the dream of fintech, to make things that are previously inaccessible, not to use the buzzword democratized, but that was something that was important to us, and something that was important to us to do it for the right assets, right? Not just bring things people don't understand to the masses, bring things they actually care about, things they spend their weekends and holidays learning about, whether it's, collecting Jordans or collecting cars or being around wine and whiskey or, dinosaur fossils or things that bring families together. In collectibles, it's always been the best stuff that has delivered the greatest returns for people and the most excitement for people and the most connectivity between people. And so, for us, that was kind of the dream. We are all collectors at heart. That started this company, myself and my co-founders, Max and Rob. And for us, it was about how do we do that in a safe and regulated way, make that available to the most possible people. And then at the same time, try to do something that is good for the asset class, right? So you take these e-liquid asset classes that are really hard to kind of function, that are trading between such a small number of people. And if you bring a lot more individuals and a lot more interest to those asset classes and that liquidity to them, you really make them better for all involved. People who are trying to buy them for the use cases, people are trying to invest in them for the upside, and people just want to be around them for the excitement of being a part of it, and owning things that have been important to them as children and as adults, and that are just important culturally to a lot of people. So, that's our goal.
Yep. No, and I obviously I think it's super dope. The coolest thing to me is just because you have this ability to invest in all these things, that are collectibles and that are, and that do seem to be going up in value over time, right? And whether that's through nostalgia or through use. I mean, you guys also monetize some of the assets on the platform as well, right? I mean, some of the cars, and place them in, what is it, commercials, shows, movies, like that kind of thing.
Yeah, I mean, some of the stuff has been monetizable more through like merchandising, right? So, when people have an attraction to the underlying thing, they will, they want to have a piece of it, a physical piece of it. And so, we own Mickey Mantle's childhood home in Commerce, Oklahoma. And so a piece of the barn, literally where Mickey Mantle learned to switch hit, fell off the barn. We couldn't put it back on. So we took it, we cut it up, we turned it into like these relic cards. We sold them, and then we used the profits from that to pay a dividend to all the investors in the house, right? So those are the kind of examples of things that we do. That, the funny part, we've done a couple of obviously domain deals together, but the parking revenue, right? We've taken that parking revenue and we've contributed it back to the bank account of that asset. So then when it ultimately sells, that's a whole extra bit of profit that we'll distribute to the investors in the deal. So those are the kind of ways where, it's one of the reasons I love, honestly, this asset class, domain names. It's digital real estate, and you don't have
100%.
you don't have to pay the insurance in the way you do. The operating costs are near zero. It's a really interesting place in a much more scalable world, which is like people's digital footprint as well as their physical footprint, right? Which becomes more and more relevant. Andrew sold me on that a long time ago when he called me the first time, and that's something I think is really exciting to kind of develop and dig into.
Yeah, and we should get into that about me pursuing you and trying to get domain names onto RallyRd and that process. But you mentioned the digital real estate, and I can't emphasize it enough that this is digital commercial real estate. That's what domain names are. Where in the brick and mortar economy, the traditional economy, your customers came in the front door, whether that was your office, your retail location, your warehouse, your office building, whatever it might be, there was a brick and mortar piece of commercial real estate that represented your company. That was the face of your business. It was the place where you interacted with your customer. And in today's world, where the digital economy is the economy, the digital commercial real estate is the domain name. It is the place where you interact with your customer, whether it's on your website, whether it's on an email address, whether it's on an app. All of that is derived from your domain name. And so, that could be a whole nother conversation about the reasons why, but this is your digital commercial real estate. And so the world hasn't quite woken up to that. You have a lot of particularly repeat entrepreneurs who may have made a mistake in their first business, realize the friction of doing business without their exactbrandmatch.com domain name. And then they never make that mistake again, right? And so in the second business, they come back, they want their exactbrandmatch.com domain, et cetera. And there's all these tailwinds that come with that. And the world is slowly waking up to understand that value proposition. It becomes readily apparent when you start watching, okay, who are the companies that became successful? They have catchy, memorable, easy to spell brands with the matching exactmatch.com domain name. And there's simply a ceiling that you hit if you don't have that. And then, in this world, you're never, nothing is in stasis. So you're either growing or you're dying. And so the moment you hit that ceiling, if you're not repairing that, which becomes very expensive by the time you hit that ceiling, then that's it. You're now in a downward trajectory. So
you're scaring me a little bit, right? Because I run an early stage business here, a technology platform, known by RallyRd, but most people think of us as Rally as well. So we own RallyRD.com, and that was that was something that was available, and we went through so many iterations when we were trying to name this company ourselves of exactly what you were talking about, right? Yep. Something catchy, something memorable, something that for us reflected. Like for us, when we were first thinking of that brand, we were like, well, we're not like Wall Street, but we're kind of like Wall Street. So like for us, we were thinking of RallyRd as like this country road where people come together and invest in things. It's like a collaborative Wall Street,
I'm so glad you said that, because I've always wondered, but in my mind, I always associated RallyRd because your early roots were you guys were all car lovers.
Exactly, so the problem.
I always thought it was like sort of a hat tip to the car aspect of RallyRd.
It was supposed to be. That was the triple entendre, right? Like that we were going for, but it was a little bit too smart, unfortunately, I think. And so, like as we started getting a bunch of press around the platform, we kept trying to push it towards Rally, but the idea of buying Rally.com, it's just insurmountable, right? So that's something that, we kind of got ourselves a little bit stuck in that way. And I think that's something like what you're describing. I'm I guess a second time entrepreneur, and I screwed it up twice. So, that's, so I think
And I still invested
maybe
in
sometimes you don't learn from this stuff, but it's too challenging, I guess, to overcome some of those the pricing challenges and some of the illiquidity challenges. And like I think that's what we're trying to solve here a little bit for in this platform is like, how do you make those things more accessible, right? Can we fractionalize something and then let somebody lease to own? I think there's some really cool business models here that haven't yet been explored. That are so relevant for people who are starting new companies and who need brand names. And everybody thinks they don't exist, but they do exist. You just need to figure out right way to to get access to them.
This is a perfect segue into like, why am I so excited about RallyRd? Why am I so excited about fractional domain investment? It's because of everything that you just mentioned. It all dovetails on access. And so like right now, you have roughly $1 billion a year from small domain investors who love the domain business. They're learning. They might be watching DomainSherpa. They might be going to Domain Dean Academy. But they're learning. They're trying their hand at buying domain names they think are good, that'll be worth more in the future, or that are unexploited and have potential buyers. And but most of that is being completely wasted on very low value domains. They're taking punts. These are highly speculative, long domain names or with weird prefixes and suffixes or, weird alternative extensions. And the reality is what you alluded to at the very beginning, which is the best assets generate the best returns consistently. And all of those words matter. Best returns, best assets, consistent. Okay. And so, part of the idea here is to take that wasted $1 billion a year that up and coming domain investors and even some seasoned domain investors are basically flushing down the toilet, buying domain names that they believe are an investment, but they're actually a liability, and converting them to, okay, instead of buying 1,000 garbage domain names, buy 1,000 shares of, I'm just using that as a random number, but 1,000 shares of the best domain names in the world, right? And they're hand selected and curated by the number one domain broker in the world, right? And so the idea is that this is why I pursued you when you launched RallyRd. I think I heard you on a podcast talking to Howard Lindzon, and I was like, the podcast wasn't even over, and I'm already trying to find your email address. And actually, I think I called. I don't even think I emailed. I think I called you. And I was like, look, you're preaching to the choir, speaking my language. I've been dreaming about this for a decade. You and I see eye to eye, and I want to bring domain names to the public through this platform. And, it took a couple of years to get the ball rolling, and there's a lot of regulatory stuff that has to be, overcome. But, it was a really important and exciting for me to be able to take a couple of domains, public, in those earlier days. And I think that this new partnership and the way that we're going to be going forward is really exciting. It's going to hit the nail on the head. And I think that by getting these names,
well, hold on, Drew, really quick.
I don't know how far you want to go on this, but
real quick, because I think this is,
yep,
we're going to get to all that, because I think this is an interesting segue. The ability to fractionalize something, right? There are tech platforms that solve for that in various ways for various things. But I think the regulatory piece that Drew alluded to, I think, is critical to talk about for at least 30 seconds. Because the 100%. Amount of work that you guys, because we've been working with you now for years, as you guys have been going through all of that process, the SEC and all that stuff, that had been the hill, right? Because it's one thing to say, hey, we can fractionalize assets, we can go in and do that. But to be able to do it in a way that's also SEC compliant is really the fucking golden ticket. So it's like, what was that effort like? I mean, and it's still ongoing, right? I mean, it's still...
it's always ongoing. Yes. So, first, one thing I just wanted to say, which I thought was really smart, and actually, it's funny, like the corollaries to collectibles in general, right? Like, people buying a whole bunch of little things for one purpose that isn't really the right thing or the right purpose.
100%.
Right.
Mm-hmm.
It like, so for me, when we started thinking about this, and honestly, I don't think the idea of like us, like we're not a stock market in the formal sense, and that goes back to the regulation, right?
Mm-hmm.
But like the idea of a stock market for cars or things or et cetera has been around for a long time. What we needed to do was figure out how to make that legal, right?
Mm-hmm.
And make that regulated and make that efficient is the hardest part, right?
Mm-hmm.
So it's not about just being able to take something public. Like that's a process that exists. It's the ability to do it repeatedly, to be able to do it at a really high level, to get the details right, so that the people who are both bringing the asset to market as well as the people who are investing it are protected, right? And what that comes down to is proper information, proper disclosures, and proper structures that fit the investment, but also allow you to do things in a very repeatable way. And so that's what, when we started this, that was the hardest part. There was no playbook for this. And so, we started digging in, and a whole bunch of lawyers said that's going to be impossible and too expensive, but we did the work, and we started testing new structures, and we started with things that didn't work and failed for different reasons. It was too hard to get the investors on board because they had to give so much information about themselves that it didn't justify a $500 investment or a $200 investment, or a different structure that got them on easily, but then they didn't have the ability to trade on the back end of that, right? And so we went through each of these iterations, and started doing that, like you said, originally with collectible cars as a starting point. And once we kind of found a pathway that matched all the different pieces, it was inexpensive to operate. It gave proper disclosures, it gave proper liquidity and the ability to trade, and it made it easy enough for ordinary people to onboard themselves. That was like the aha moment. And we brought that to the regulators, and we went through the process with them very slowly to educate them on what we were doing, why these asset classes ultimately were appropriate for retail investors, right? And, like a lot of this regulation, that's what they wanted to do, is make things more accessible to more people. But the regulations are being used to make things that were inappropriate for those people accessible to them, right?
Yeah.
So let's use this regulation to make highly speculative early stage startup investments available to ordinary people, right? Okay, like I guess that makes sense. Like, and they want more capital formation. So a whole bunch of like things that are suboptimal are showing up. Here, we're bringing a collectible car to them that has a history of having value and growing in value. And now we're making that available to a lot more people who love and understand collectible cars, but can't afford them, right? So the ethos behind what we were doing just made a ton of sense for the regulation. And then the process by which we were able to fractionalize these things, go through a qualification process with the SEC, and then make them available it made sense. So, it probably took us almost 24 months to get the first one approved. And now, that was in one asset class. Now we do that across, we've done 20 different asset classes ballpark, between the books and the watches and the wine and the whiskey and the dinosaurs and the domain names and the
dinosaurs,
Birkin bags and, and the sports memorabilia and the sports cards and the Pokemon cards and the, so we've done so many different things now that we've turned that into a process that works for tangible assets, for intangible assets, for cash flowing assets. And so, that's become kind of, a relationship with the regulators over a long period of time, and a process that we've gotten very good at. And now, we've now expanded that to bringing in partners like you, right? So, DomainX, your kind of core top brand, is acting as the effectively the asset manager in that relationship, right? What does that mean, right? You all are bringing the assets as the seller to the platform. You're doing custody, right? Which is, of course, one of the most important things, is securely holding this stuff in a professional way, making sure that, it's accessible and used properly. You're helping to monetize it, whether it's through parking or leasing or other ways of earning from that domain while it's in our inventory, if you will.
We should come back to that, just touching on the leasing part, because I in my mind, it's not tomorrow, but it is the future of this relationship, the asset class,
100%.
the whole thing. This is where it's going. This is where it's going.
That's the
100%.
Lease to own or rent for a purpose and then give it back. I mean, like this, like, and the pricing relative, if you want to look at like real estate cap rates versus digital real estate cap rates, right?
Mm-hmm.
Like as this continues to develop, that's something I couldn't be more excited about, right? And like,
like domain, is like that's gonna be a thing. Like, I'm throwing a party
first of all,
you
absolutely, if you don't brand that, I'm going to, right? Like, like that is exactly where this industry should go.
Cut that because we're gonna go ahead and pursue that before we send it out to the general public. Okay, so real quick, we'll put a pin in that for a second because I want to kind of keep this in somewhat chronological order. Drew mentioned chasing you guys down to establish the partnership, which I was part of. In fact, I've mentioned this on the show. We briefly talked about some of what we're talking about now on the last episode of DomainSherpa. And
well, actually, when I was chasing Chris down was before your time.
Oh no,
I started chasing Chris down in 2016.
Well, no, and I was saying, by the time that I got involved, it was already, a pretty established conversation and dialogue, and it was still pretty fresh. And this was after years. And but it was one of the things I was most excited about coming on board full time with MediaOptions at the time was because of this partnership and just Drew's vision of fractionalized ownership of domain names in a regulated legal way for the masses is just super, super cool. And it's not even it's just so early stages, we get that initial sort of piece laid out, and then there are domains now that we've already listed on Rally, right? So I mean, I think so that for anybody who isn't aware, I mean, we should mention that. I mean, so you want to talk about that for a second, Drew, Chris, as far as getting hotspot and what else have we've done, and then also then let's get into the new stuff and what's new, because now we have this sort of more involved relationship. This partnership is an elevated one. We should talk about the difference there too, like what's new.
Yeah, it's going to be a lot more fluidity. So the first deal that we took public was directions.com.
Correct.
That's right. Right? It was directions.com. It's a killer oneword.com with massive search volume. It has a lot of traffic, and it earns some income from parking. And so, in our mind, although I'd be the first to say, like, it's not this isn't the best brand in the world, but it is one of those category-defining domain names that has an endless number of end users, both from a brand standpoint as well as a generic standpoint. It has traffic, it has revenue, it has all of the things that you want for a blue chip asset to take to the public to say, okay, this is an asset that has a high probability of some kind of monetization or exit. And, again, it's an asset that we bought. We took it public at some, modestly higher number than what we paid. And we're giving the public an opportunity to basically invest as I do alongside me and benefit or lose as I do. And so, based on my track record, we hope that we will be able to continue, curating phenomenal domain assets and, selling them to the best and highest used end user or leasing them out to the best and highest used end user, getting them into the hands of the best and highest use end user or startup at the earliest possible stage using creative deal structures like lease to own or lease with an option to buy or financing or what have you. And there's other creative deal structures I think that we're going to be exploring. So I think that, that's how it kicked off. The next deal was Hotspot. Hotspot is one I particularly love. I really love that domain. It has a lot of traffic. It earns pretty good traffic revenue. As Chris alluded to, that traffic revenue basically accumulates. We, as the asset manager, paid out to RallyRd on a quarterly basis, and then RallyRd is accumulating it and will ultimately pay it at exit to the shareholders. And so that's a nice cherry on top to the shareholders, when the asset does exit. I think that's the type of asset that just lends itself to either a quite big exit or a really nice long-term lease deal. And I say that
exits,
when I say that's the type of asset, because again, it's like Directions, but even much better brand. There are a ton of qualified large end users that go by Hotspot for varying different purposes and different industries. There is the generic meaning of Hotspot, which actually connotes massive value. If you go into any coffee shop, that's the reason that we get so much traffic. You go into any coffee shop in the world and you go look for the Wi-Fi. And what does it say? It says Hotspot, right? And so hotspot.att.net, hotspot. Whatever, singular. It's a subdomain, meaning an entire category of business of every telecom, in the world.
Yeah.
And so, anyways, these are the types of
100%.
assets.
Yep. Well, real quick, the other thing too, I think you mentioned the exit, right? Potential exit. I think that's one of the really cool things and we've been seeing it happen, not just, not with the domains necessarily, but with any of the assets that are on Rally, right? Like the Lamborghini that just sold for $1 million, right? There was $1 million.
I don't know what you guys are doing, but all of a sudden I'm getting exits left and right. It's like Ferrari exit, Lamborghini Countach Turbo exit, Jordan Day One worn sneakers exit. And it was like, I'm getting.
Yeah, I think that's so cool.
Nice, I'm getting some nice exits.
You said it earlier on the call today. With in domaining, you do enough big deals, it's like every day is an exit.
Every day is an exit.
So this is we have to go back and remind people of the disclosure that we put at the front of this podcast, right?
Yeah.
This is not investment advice. That's right. No, but it is exciting,
we buy,
right? Like that is the
of
point.
Domains, and then dozens of those a year sell, right?
That's
and
the
so,
point.
our time horizon when I'm buying a domain name, my expected time horizon is 10 to 20 years. Now,
amazing.
That's
information.
It is often that they sell faster, right? But you don't know. The expected time horizon that I have when I'm making an investment is, let's say 10 years, right? But my tolerance is 20, right? If I haven't gotten a good lead in 20 years, then it's like, okay. But this is commercial real estate. This is digital commercial real estate. We are building. You're still, in my opinion, the early stages of building the global digital economy. It is only in the last, I think 3 years that I think just basically since COVID that the digital economy overtook the global traditional economy, brick and mortar economy, physical economy. And so, look, it's the digital economy is up only from here. And so this is the underlying real estate of that digital economy. And I want to be on that train. And the idea here is that anybody else that agrees with that thesis now has the opportunity to also get on that train, for a small ticket, right? Should we talk about the first deal we're going to do?
Well, the one thing, what I would say, the more broadly than that, what was important to me about the partnership is ultimately and how we've even morphed Rally over the past years to be more like this is the affiliation with experts in a category, right? We've done a bunch of deals across a bunch of categories, and what we learn is that there's access to deal flow, the supply side, right, and then there's access to people who care, the demand side, right. And the idea of working with somebody like yourself and JT and DomainX is it gets us into that world in a way where you do get access to the best supply and you do have the knowledge to know what it should be paid for, right? Mm-hmm. So all of that, pun intended, domain knowledge, right, gets translated into the quality of assets that end up on the platform. And I'll tell you, you don't often find people like yourself who are willing to open that up to for the bigger picture, right?
Well, and not only I'm also putting my money where my mouth is, right?
Exactly.
So, I really want to be abundantly clear on two things. One is I'm putting my money where my mouth is. I'm putting a lot of my money where my mouth is. I will own a large portion of most of these names that we're going to take, or all of the names actually that we're going to take public. I will always have my own money in every one of these deals. And in most cases, I'm most likely going to be a shareholder, maybe even a majority shareholder until exit, right? Like I'm you know,
Yeah, the hard part is trying to get him to
I
give
don't
up,
think I've ever sold a
give up
share
equity
other than the
in
initial
some of these
IPO. I
deals.
don't think I've ever sold a share of any of the other two deals, right? It's like, if anything, I'm generally a buyer when I see the market get below what I think the value is. So, I think that knowing that you're investing alongside an expert, but also that expert is putting their money where their mouth is, I think that is a quite unique value proposition. You don't really get that anywhere else in the world, except maybe at the very high end in hedge funds, in financial assets. If you have a lot of money and you can back the superstar hedge fund managers, and you're basically, they've got some kind of carry, so they are investing alongside of you. They are putting their money where their mouth is. They lose if you lose. They win if you win, and that's what we're achieving
yeah,
here.
but let's
right?
be clear, to be even able to participate in a situation like that, you literally have to be in like such the top,
well, that's it. That's what he means by privatizations.
Yeah. I mean, it's like, talk to me about, you want to be able to invest in, even any of these private equity funds. It's like, are you accredited? Do you have the connections? Like, who's your asset manager that'll even get you?
Forget about accredited. They don't even ask, because if you're, if you're on the phone, it's like,
yeah, it's like, hey, you better ask. You can't afford it.
Deal otherwise.
But that's my point. So, and I think a couple of things, and because I think it's important to mention too, when you talk about motivation here, right? I think, I've been doing this with Drew long enough, and we've been doing just like the DomainSherpa thing. I say it in the intro of every show. Click the like button, the subscribe button, and all that stuff. Help us grow the pie, right? It's this idea of like growing the business. His vision, part of what I was very excited about, even this is years ago coming on board, is that we want to expand all of this out, so that you talk about access and and again, expansion of just the space in general, so people understand how great domain names are. In some ways, doing the shows that we do and doing all of this stuff, we create competition for ourselves, right? So it's like, it's an interesting dynamic, because it's like, hey, is it all altruistic? No, I mean, we're here, it's a commercial enterprise, but at the end of the day, you're talking about somebody like Drew.
Listen, like Charlie said, Charlie Tuna said, I'm not Mother Teresa. I'm in this for a profit, right? I make no mistake. This is not, me volunteering, right? I'm in this for a profit, but you get to profit with me if we profit, right? So,
that's all.
It's not altruistic, but there is a very, very sincere, and I mean, I've been saying this publicly for a very long time, a very, very sincere desire to educate the public, particularly educate the business public about this asset class, really to even introduce the idea that domain names are an asset class, to help them understand that, this isn't just one of the boxes you need to tick in setting up a business. No, this is your commercial real estate. There are many ways to skin the cat to obtain it, or to get rights to use it, or to own it, or what have you. But it is an absolutely essential element, and potentially the most valuable asset on your balance sheet.
Exactly. I was just going to say American Airlines, right? I mean, effectively took a loan out, on their domain name. I mean, which is becoming
$1 billion.
And it's the idea of putting
domain name and trademark, to be fair. It was domain name and trademark. I don't know if there's this other associated IP, but it was domain name and trademark for the AA.com. They got $1 billion commercial, bond. They basically did a bond offering. I don't remember the exact terms, so I won't get into it, but they did $1 billion bond offering with their domain name and related trademark as collateral, and a successful bond offering. And so, as far as I know, that's the first publicly known debt instrument created with domain names as a derivative. And that's exciting. It's just another milestone. It shows you where we're going. Domain names are the early days of commercial real estate, and there's no leverage in the market. So I go back to my inspiration for all of this was Sam Zell. Sam Zell did this in the commercial real estate industry. He didn't invent real estate investment trusts, but he basically took them from a backwoods, investment class that only the people like penny stock traders were interested in, to one of the largest and most prestigious asset classes on earth. It made him a billionaire, made him one of the most respected investors of all time. Rest in peace, Sam Zell. And I believe that is the trajectory that we're on with domain names, whether it's me or somebody else. I don't really care. In fact, I don't even know that I really want it to be me, but I believe that we will have the first internet real estate investment trust, in the next decade or so. And, maybe it's going to be even on RallyRd. And so I think it's an emerging asset class. I think it continues to be an emerging asset class. I think that you only have to look at, ask yourself, what's going on with the overall internet? Is the internet growing? Is there going to be more people on the internet a year from now? Are there going to be more businesses on the internet a year from now? Are there going to be more businesses that want to be on the internet a year from now? If the answer to that is yes, then the domain name market must grow by definition. And so, like every other asset class, no exception, the cream rises to the top. So if you have a market that's growing, the cream rises. And that's the idea here is my job to go out and curate the cream, take it to public, and allow anybody that shares my conviction in domain names as an asset class to invest alongside of me. And I'm literally, it's actually the only thing I'm excited about.
I just want to feel something. No, I'm with it, man. I love it.
MediaOptions is the industry's leading domain broker specializing in domain acquisitions, high-value domain sales, and domain name consultation. As pioneers and thought leaders on the subject of the domain aftermarket and domain name value, plus through their clear domain acquisition service, MediaOptions offers startups and established corporations an unparalleled scope of high-value domain options, providing access to domain names and curation technologies not available elsewhere. MediaOptions believes in the power of a great domain name and is dedicated to helping you obtain yours. Call or email today to put a domain to work for you.
So let's keep it moving. And then, so let's talk about what's next. Let's talk about this new, can we, we mentioned it on the last show, so it's not like it's some surprise announcement, but let's talk about MJ.com.
So MJ.com is, one of the 676 possible two-letter .com domain names that exist in the world. It is among the best company that one could have in any room, meaning, AA.com, as we just said, is American Airlines. BA.com is British Airways. DS.com is Goldman Sachs. ML.com is Merrill Lynch.
FB.com.
FB.com is Facebook.
MS.com is Morgan Stanley, right?
It goes on and on and on. Roughly 550 to 600 of these out of the 676 are in use. They're owned by massive multinational corporations. They are the highest trust signal that exists on the internet, full stop. And that is why the companies that depend on their consumers' trust the most have adopted these and continue to adopt these worldwide every single year. Less and less of them are available. I believe the number is there's less than 100. It might even be 80 that are still in investor hands. It is an extremely scarce asset. You're talking about 15 to 20% of the total supply that is actually in float. That's it. And it is exceptionally rare that they trade below $1 million in the investor community. And the ones that do, which they do occasionally, are generally of lower quality letters, meaning they don't insinuate anything. There's not obvious use cases or obvious end users or obvious utility. And they're trading primarily just on the scarcity alone, without the brand value, without the, fortune cookie value, if you will. I know there are really good end users that eventually are going to say, I want this, right? Or this is going to be my legacy, or this is whatever it might be. So I think
clearly the most valuable, clearly it's the most valuable domain that we've listed on Rally to date. And then as far as this new,
sort of call it the new partnership, how is that different? How is this, more evolved? And, since, we've begun listing names on Rally.
The main difference is the level of activity and responsibility that we've brought to the DomainX side of the partnership, right?
Mm-hmm.
Previously, it was much more like we would acquire passive. Something, more passive, right? Like, and I think here the idea of like the real critical piece, one is the level of retained ownership that mm-hmm. DomainX and Andrew and you all have in the assets. Two is the responsibility, right? So the custody responsibility, the potential monetization responsibility, and the main one being decision-making on the exit responsibility, right? So that's something that remains in the control of DomainX and gives you a lot of sort of control over the primary asset, right? Which the underlying shares are based on. Leaves a lot of control in the hands of DomainX, and as
well, and it allows us as arguably the best negotiator for domain names on earth. It allows us to
humble brag, right?
Yeah. Well, look, I mean, how many of these things you want to see? I got 4 more like it.
We got one for the thumb.
The idea is.
What is it? Michael, it's speaking MJ, right? Michael Jordan. It's 6
MJ,
championship.
We're at 6.
Yeah, 6 championship rings.
That's it.
In our museum, our Rally museum right here, we've got all 6 of the championship rings.
I'm a shareholder in those rings.
There
in
you
fact,
go.
I keep buying
so it goes full circle, right? Because he wants to wear them at home when he's by himself on.
I want to buy them
on Thursday evenings, looking in the mirror with his 6 rings. So.
There's a monetization
opportunity.
You're
going to see me like this. I'm going to record all my podcasts like this. Just 2 hands up like this, recording.
Meanwhile, in the background, he'll have the guy like the security guy who's going to bring it in this like briefcase, bring the rings and sit there like the whole time just watching him as he's like flexing with them and stuff. But no, and
what does it take to get those off market?
You got to make an offer. It goes to the shareholders. The shareholders will voice their opinion, and then the decision gets made. But for you, the price goes up because we know how well you're doing here. So.
Exactly. Every day's an exit, baby. Every day's an exit.
Every day's an exit.
Well, yeah, no, and I think this is more in line with Drew's vision and the idea of like, hey, like, come invest with me, right? I mean, that's like kind of the whole thing, and providing more, involvement and responsibility, and I think that's important, and putting it in the hands of the experts, which I think is great, and then obviously bringing this kind of name to the platform, which is, like I said, it's the most valuable name that we've done to date, and it's just exciting, man. It's super, super cool. Well, so
keeping this simple, right? You are you're an investor in other asset classes, alternative assets, collectibles, whatever it might be. You're a smaller domain investor. You've never bought a domain bigger than $500 or $1,000 or $5,000 or whatever it might be. And you look at your track record, you look at your sell-through rate, you look at the the value. What are you making 10x when you sell these? Are you making 20x? If you're not, you're probably not even paying your renewals, right? And so how many of those did you sell, right? Did you sell 1 out of 1,000? Well, that's going to be a tough portfolio to carry and generate a return on. So, the idea is that, okay, take a pause, step back. Do you believe in MJ.com? Do you, I don't know any domain investor who wouldn't love to own a two-letter.com. There are very few domain investors who have ever had the ability to own one. And so suddenly, for the first time ever, anybody has the ability to now own a piece of one of these 676 possible two-letter.coms, but arguably one of the best ones that exists. And so I think it's a really, really cool opportunity. And the fact of the matter is this: I recently bought this domain. Maybe, I don't know if we want to get into the history of the domain, but I recently bought this domain back. Okay. And you guys, anybody that wants to, invest with me on RallyRd, are going to basically be getting it at my cost plus, some administrative fees and whatever, the small markup to take this thing to market. And that's, I don't know. I wish I had that opportunity when I started out, because I wouldn't have blown $300,000 on absolute garbage that I've since deleted. Right. And so, and that
that's important,
$300,000 would have compounded since the last 25 years. And I would be in a, well.
But I think that's important, right? Like that, and that's the balance in this ultimately, right? So I think there's two things you said. One is the reason we started Rally, and I'm a car person, at heart, right? The reason we started Rally, and as a car person, I know other car people don't like it when I say this, because like cars are supposed to be used and driven, they're not investments, right? And I get that, and I appreciate that. For me, what it was originally was optimization. Right. There's for most people, certainly for me, there was a limit to the amount of capital available for something I cared about and wanted to be a part of, cars. Right. And you take that and you try to buy the best thing you could possibly buy. Right.
100%.
And then you buy it and then you worry because every time you use it, you're devaluing it. Right. And you still didn't actually buy something that's that great. Right. It's because you don't have quite enough money to do that. And so you've spread yourself thin on both. You've degraded your utility and you've degraded your investability at the same time, right?
Yeah,
and that
you
that
didn't
never
get that. You didn't get that pristine cherry.
I bought
car.
Something nice.
You got something
growing in value, right?
Yeah, it had nice paint on it, but that engine had been replaced. It didn't have any original parts. It's got, and that maybe gives you that nostalgia feeling, and that's great. I don't judge anybody. That's great.
It's great.
But it's not an investment.
And it's not optimal, right? Like I tried to make an investment. So I got something good enough, but not great, right?
Yes.
What I should have done is take half the money, buy something awesome and fun to use every 100%. Weekend and not think twice about it, and use the other money to pay for it by investing in the best of what I know. That's why we made Rally, right? And that's the theme here. Ultimately that's where I hope people see it, in a world of domains. I think it's similar in some ways to collectible. I think it's different in some ways, right? Like a lot of what you're talking about with one of 676 and the number that are left and the number that are still available, right? A lot of that resonates with me in the sense of like, I like things that are one of few. But also it kind of has some of the art part of it, right? Where everything's a one of one also in a certain ways.
Yeah. 100%. I mean, these are these types of two-letter.coms, three-letter.coms. These are one of a few, but every single one is a one unique. Of one. That's every single one is a one of one, or as JT says, every domain is a snowflake.
I know. It was cooler back before snowflakes were thought of in such a negative way. You know what I mean? Because that was a great now it's not. It doesn't carry the same weight. I have to come up with another thing. But but it is really true. And I think the uniqueness of it. I mean, that's one thing that we just love about domains. I mean, the utility combined with the upside. But hey, as we've said, just running through the rule. We put up the card in the beginning of the show with all the disclosures and the disclaimers. To be very clear. None of this is a promise of future returns. Or anything like that. This is not financial advice. Just trying to shoot as straight as possible so that just everybody knows what's up and what we're doing. So,
anybody that watches this show, it's abundantly clear. I personally, I'm very bullish on domain names. I've been very bullish on domain names for the better part of, a quarter century. And, I continue to acquire domain names as investments. I really only invest in two things at this point in my life, and that is domain names and Bitcoin. And shout out Bitcoin. And so I just think that we are moving towards a digital future, right? And so for me, my Bitcoin is my digital money, and my domain names and in collectible investments on Rally, for example, these are the assets, the asset investments, and I love it. For the same reason I love owning domains, I love owning assets on RallyRd because I got an app. I go in there, I can see my portfolio. But it's real things, it's like the stuff that I dreamed about as a kid. Like, I remember when you guys launched that purple Lamborghini from Jamiroquai, and I was like, no way. Are you kidding me? I love that music video. And so I immediately went and bought some shares. Like, it's like, how freaking cool is that? So anyways, I am very glad that we can now be a part of that we can bring domain names through the platform that way. I'm excited to see how MJ.com goes. And if this goes well, and there are a bunch of you that believe in my thesis and are going to invest alongside of me, then, we're going to just start taking names public. We're going to be finding the best deals in the market on the best assets available in the market. And, what I buy, you can buy. And that's the idea. And I couldn't be more excited about it.
We couldn't be more excited to have you all on the platform with us. It's been a long time in the making.
Yes.
We'll give the shameless plug and the call to action. Go to MJ.com to get early access to some of the investments that are going to be curated by Andrew and JT and DomainX. I think what you all said is right. It's balanced, right? You obviously have been doing this a long time. You have wins, you have losses. You try to get good quality stuff, and we're doing it together where we're aligned in that way. So,
yep.
And it's just a lot of fun. And it's just fun, man. I mean, I think, like I said, I'm such a cheerleader for the platform. I think it is so slick. I think the app, the work that you guys have done, the improvements that you've made to make the secondary market more available and efficient, I guess, and the continued effort to continue to improve the platform, the work that you've done on the regulatory side. I mean, and it's like, look, domains are not like, I'd tell everybody, just check out like, it's just so dope to be able to get involved in all those different types of collectibles and cool things. And in a lot of cases, not all cases, right? I mean, you're making money. I mean, it's like you're investing in different things, right? People are investing in shit coins. They're investing in good domains, bad domains, Bitcoin, real estate. Like, it's just, it's just another opportunity of alternate investment, which, and I think, to me, it's the pop culture nostalgia piece is cool. Like, just all the different stuff on there. First edition Harry Potters. I mean, there's just so much cool shit. It's like, I love it. It's so cool.
So 100% amazing, cool shit. But the best part is that I don't have to become a fucking expert. I mean, I probably invested in, 10 or 12 of your asset classes, right? And I don't know anything about most of them, right? Other than I think they're cool. Right, but I know that.
But then you start to learn, right? Then you get involved, and then you start to learn
by somebody that is an expert, right? And I know this is going to be a cherry asset. This isn't going to be some janky third-tier asset in that asset class. It's going to be the asset. It's going to be the, and so I love it. And I'll tell you what, honestly, it's like one of the things that I have the most fun with my kids. Is like, my son loves to go in there and look at the cars, and like he'll come up with, oh, this is now my new favorite car, and say, let's buy a couple shares of that, right? And it's like
learning, yeah.
It's amazing. It's amazing, and it's like, oh, you know what? I don't like that car anymore. All right, well, let's sell it. Let's buy something else. What do you like now, right? Mm-hmm. And it's unfortunate though. All of our favorite stuff to keep getting sold.
It's a good bad.
Bring new favorite things on. New favorite things.
Yeah, good problem to have. I think we said, look, curation is going to be key in the future for almost everything. And I think that's one of the things that
whether it's your news or your investments or what have you, your friends, everything is about curation, because in a world of abundance, the only thing that matters is curation, right? So,
well, because it's trying to find the signal and the noise and all that kind of stuff, right? I think
that's it.
And I look at it, even Drew will not agree with me, but like, I do like to dabble in some shit coinery, as Drew would call it, some of these meme coins and stuff. But part of it is even trying to figure out, like, hey, like, what coin am I trying to, and I'm saying this is small money, and just having some fun with it. But I think the meme coins and things, in a way, are also kind of like I talk about with the rally stuff. I go down those rabbit holes, right? All of a sudden I'm down some fine wine rabbit hole, which is like crazy, or like comic books and stuff. And then I'm Googling stuff, and I'm kind of finding, reintroducing things from my childhood. And, but even with the shit coins, right? It's like, how do you know what you're trying to put your money in? Well, you're trying to find trusted sources to give you some information or insight to let you know, hey, this is something you should be taking a look at. That's why people have these.
Agree with or support that analogy in any way. In fact, I don't think that there's such a. I think it's there's no such thing as a trusted expert in shitcoinery. Shitcoinery. You know what I mean?
All I'm saying is curation is important.
What?
Choose rich, Drew. That's all I'm saying. Hey, look, it's all good, but and it's all a lot of fun. And I think that's another thing too, man. It's like, we work. A lot of us are remote. We've got investments across a lot of different things. It's opportunities to also. I love the piece with the kids. I mean, Drew told the story, so we don't need to repeat it. It was literally on the last show about his daughter and flexing the first, the pair of Jordans on these kids. And
more Jordans.
Drew felt the need to flex on some 9-year-olds, and now these kids, like, he can't walk into school
without
them.
Okay, they were 10.
But it's just cool, man. It's just all good stuff. It's cool. But anyway, none of this is financial advice. And again, we're not promising any kind of returns on anything. We're just letting everybody know the opportunities or just the experiences that are out there, and what we are doing. And again, Drew and DomainX, and we're putting our money where our mouth is. And this is what we love. We love domains,
Again,
and we love Rally, and we appreciate y'all.
Your win if you're a co-investor, and my loss is your loss, right? So, I'm going to do my best to curate the best assets in the world. And really, when it comes to domain names, that's where the money's made. Right? We got to find the right assets. We got to get them at the right price. And if we do that, the rest is sort of up to destiny, right? But we are, doing our best to be, they say luck. The better prepared, the more lucky you are, right? And so It's like, look, we know what attributes make great domains. You want scarcity, you want irreplaceability, limited alternatives, and you want easy to spell, easy to remember, positive connotation, all of these things. And these are the assets we're going to be seeking. MJ.com is the first one. Hopefully, many more to come.
Yeah.
And,
look, you said it yourself. The cream rises. I mean, and that we've always been about the best of the best. At the level that we're at, that's what we do. I mean, not every domain we have in our portfolios is super premium, but we've got a lot of great domains because that's ultimately the business that we're in. And we also say on the show all the time, the money's made on the buy, not on the sell. You get the right asset at the right price. The rest will fall into place. It's always good to follow, some of the best. So all good. And I think with that, we covered a lot of ground.
The only other point I wanted to mention, this is a little bit more speculative, a little bit more out there, but it's just an idea about the future of domains that I have that I think Rally will be a platform for implementing or getting this concept going. Let's just say that you're an A round startup, B round startup, and you've already got your domain. You've gone out, you've spent $200,000, $500,000, $1 million. You bought your domain, okay? And now we're in an environment with rising interest rates potentially, or at least even if the interest rates stay where they are, your capital is relatively expensive, and I believe that there will be a market, or there could be, or there should be a market whereby you can take your domain name public and then send out a newsletter to your customers and say, hey, we are going to take our domain name public at X price, and we're going to give you, our customers, the ability to now own a piece of our intellectual property. You can be an investor, not in our equity, but in our domain name.
Yeah,
and we are going to basically lease the domain name back from you. And it's like, what an amazing way to build a stronger relationship with your customers, with your fans, with your audience, right? I really, this idea that there's a larger concept here that RallyRd is on this wave, that domain names are on this wave. The whole world is on that wave, the real estate, everything. The idea of participation, the idea of, okay, I'm not just a consumer, I'm also a benefactor of the companies that I consume from. I'm not just a visitor, I'm a owner, or I'm a benefactor of the places I am in, or the real estate that I live in, or the condominium building, whatever it might be. Okay. Yeah. And I believe that this is a really interesting opportunity that has been 100% unexploited. And I think it's a really interesting way to raise cheap capital, create a really strong relationship with your customers, your audience, your fans, whatever it might be. And basically just get a huge win for the business on really attractive terms that are also beneficial to the audience, fans, customers, et cetera. And so I would love to see, a deal on RallyRd like that. And I think that we will in the future. I think that that's going to be a really cool, disruptive way to for capital markets in the startup community in particular.
That's really well articulated. That's why we built this platform, right? And that's what it is. It's equity capital markets when it comes down to it, applied to places where people care, places where people understand. And, and you're right. It's not just being a customer, it's being a part of something, right? Like that's the equity economy, the difference between
100%.
Right. You could come here and you could buy my limited edition thing and we'll never talk to you again. Or you could be a part of something and a community that you're actually supporting.
The community piece,
individuals, brands, things, etc. You got it. Really well.
The community piece is huge. We've seen that in crypto. We've seen that in NFTs. We've seen that across the board in just various things. I think people having ownership and equity. I mean, it's the idea of giving employees stock options.
Human nature. We were born with this. We want to be a part of things.
Well, yeah,
we want to feel purpose and
100%.
Share common interests with other people.
The book, what is it? Power of Habit. Charles Duhigg, talks about the people when they feel like they have a sense of control, autonomy, ownership. How it just it changes your whole outlook, and improves performance and improves it's the whole thing. So I think it's like people feeling invested, and I think you're absolutely right. The idea, and we've talked about trying to connect these dots with NFTs and some other things about the idea of this ownership, this community, this sort of general all communal sense of purpose that has everybody just a much more positive overall experience. It just leads to better, more positive outcomes. And and the options and opportunities are pretty incredible, and like you said, unexploited, untapped. And but we'll see. It's sort of like, are we just at the tip of the iceberg, and let's just one step at a time and just keep doing what we do, and we'll see how it shakes out. But it'll be a fun ride in the meantime, and looking forward to it for sure. So, all right, well, listen, guys, I'm going to play the moderator and shut it down now. I think this was great. We covered a lot of ground. I appreciate both of you, especially you, Chris, for being here. Again, founder, president, RallyRd. Thank you so much for taking the time. We know your time is valuable, and appreciate the partnership and the relationship we have. Looking forward to all of this. So. Thanks for being here.
Right back at you. It's been great getting to know you both over the past number of years now, and I couldn't be more thrilled to be working together and doing this together. So thanks so much.
Hey, by the way, anybody that is in New York, if you're in Manhattan, you have to go check out the RallyRd showroom. It is literally like if you're with your kids or yourself, but it is one of the coolest things to do in New York. Like 446 Broadway, you walk up in there. And it's like, I don't know what's in there now, but when I was there, it was like, the coolest Porsche ever sitting in the showroom right there.
We have dinosaurs. We do have dinosaurs here. Yeah.
Behind that is a giant a Triceratops skull, which I'm also an investor in. To the left, you've got Jordan's 6 rings. To the over there, you got Muhammad Ali's boxing gloves. You go over here and it's like,
Honus Wagner. We got Honus
you
Wagner
can play,
here right now.
You guys have a Honus Wagner?
Got a Honus Wagner, T206.
Yeah.
Saw
Real
that.
deal.
And then
I love that Drew knows the address by heart.
You
That's
had that.
crazy.
Well, it's kind of a funky, catchy address,
It
and
is,
you had it dope.
Yeah,
You had a dope domain
446.nyc.
name.
446.nyc.
Yeah, 446.nyc, exactly. And you can go on the virtual museum tour. Yeah, it's awesome. And you can click on the assets and I think, can you invest right from the thing?
No, you got to go through all the regulatory stuff and on the platform. But it's a good to kind of get a sense.
It's really
of
cool.
It's really cool.
It's really cool.
We got to throw the link, Billy. Let's remember to throw the 446.nyc link in the show notes and all that kind of stuff as well. So let's make sure we do that along with the rally links and all that good stuff. MJ.com. Make sure we've got all that there. But
Yeah, we were just up in Philly and went to some random museum that was not the same experience. You know what I'm saying? We saw the Liberty Bell. My kids could not have been less impressed. You know what I'm saying? And it was like, I wish we were in New York. We would have gone to the rally showroom. That would have been the move. So, all right. Well, so definitely make sure you all check that out. Get familiar, guys, because, we're going to be getting busy and there's going to be a lot of cool stuff. And, so, get the app, all that good stuff. All right. Well, listen, Chris, thank you so much. Drew, as always, thank you. And to the audience, like I say in every show, thank you guys for tuning in. Without you, there is no us. So thank you so much for taking the time. And since this is a Down the Rabbit Hole, I'll close with the fair farin, which is the Scottish phrase meaning good journey. So may you travel far under fair skies and even further down dark, deep rabbit holes. All right. Thanks, everybody. Domain Sherpa, all roads lead to domains. We'll see y'all next time. Peace out.